Hey guys, hope you are all having an amazing morning today. So, I feel like a lot of things are slowly changing in the overall economy, many which will impact GameStop and AMC in different ways. Over the next couple of weeks, morning videos are going to be covering the different economic changes taking place in the world, rather than just hyper-focusing on Wall Street like we have been for the past month or two. I think we have devoted a lot of time into Wall Street and how they operate, and now I think it's time to really embrace and break down all the changes taking place across various economic sectors. Today, we will start with China and their attempts to combat crypto. Lately, they have been pushing their new digital currency as a way to fight off crypto, and I want to explore what this is and what it means overall. I want to thank Jane Lee for her amazing work into this, which greatly inspired me to make this video. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. China has been working hard to try to upend the dollar as the global currency, and part of their quest to do this was to initially embrace cryptocurrencies. Just 2 years after Bitcoin was released, China upended up their very first Bitcoin exchange, as both the place where equipment would be used to mine the crypto as well as the place to trade it. In 2016, China was a huge influential player in the industry, but something was different. China's newest president, Xi Jinping, had clear issues with the way cryptocurrencies worked, because they were directly at odds with the way the Chinese Communist Party wanted to govern. In 2019, China's central bank said that Facebook's new crypto project, known as Libra, presented a threat to their central bank authority. This same year, a man named Mu Changchun, who worked as a top official at China's central bank, was appointed as the head of a team that was going to dedicate themselves to develop China's digital yuan. The basics of this new digital currency take a lot of inspiration from cryptocurrency, but the main essence of it is vastly different. Control of this digital currency is all at the helm of Beijing. Now that just a couple of days ago, the digital yuan has been officially released, China is intending on ramping up its efforts to crack down on crypto, with the intention of replacing it with the digital yuan. I want to take a moment and talk about what the digital yuan is. This new digital currency is distributed by the central bank via 6 major banks. Users can make payments using a wallet app that scans QR codes. By June last year, around 20 million digital yuan existed, with transactions volumes reaching 34.5 billion yuans, or $5.3 billion. Through its design and promotion, China's government has 3 major goals. It wants more control over how money flows in its country, so that they can press against illicit activities such as money laundering. They want to regain control over payments that are increasingly mediated by the private sector. Alipay and Tencent's WeChat Pay have both received serious antitrust probes lately, and have been forced to share their data with the state. It is clear that China wants to supplant these companies, or any company big enough. The last major goal they have is to boost the yuan's international standing, and get it more mainstream as the time goes by. There is one key advantage that the yuan has that other tech giants don't. You see, in China, there are many people who live in offline rural areas that don't have access to the internet. One of the key functions of the digital yuan is that it has a key function that allows people to transact between one another even if they aren't connected by the internet, simply by tapping phones together. Aside from this advantage, which should not be undermined in any way, the yuan doesn't provide any real advantage over any other existing payment tool. There have been a lot of global concerns over China's digital yuan, as you might imagine. China is actually planning to use the upcoming Beijing Winter Olympics as an event to advertise and show off their new system. The Winter Olympic Games will feature ATM machines that can convert foreign currencies, like the American dollar, into virtual Chinese money, which will be carried in digital yuan wallet cards. However, even with this attempted to market this new currency to a worldwide audience, it is not going to be as easy as they think to implement it. First, China's tight control on the exchange rate already will hinder the yuan's ability to get worldwide appeal. Another issue the digital yuan will have is that it doesn't quite solve the problem of exchanging the currency back to the dollar. Remember, the US dollar makes up 2/3 of the world's currency reserves, compared to only 2% of the yuan. Also, we know that the government of China is incredibly controlling and intrusive, and this reputation will be a major concern for potential adopters. If that wasn't enough, the issue of anonymity is a serious challenge facing the digital yuan. For example, in China, Users will need to register their numbers with real identities, so the digital yuan will serve as yet another instrument that controls and catalogs the actions of every citizen. China will probably have something similar where they can track and see what the rest of the world is doing. We know that the private sector is always pushing the boundaries of its users, and it has become a great contention in politics. The digital yuan will provide the Chinese government a way to do the exact same thing Facebook and other giant social media does. China has had a very volatile relationship with cryptocurrencies, often switching back and forth and not providing a sense of stability. Keep in mind that crypto found a lot of stability in China since it was first implemented with the release of Bitcoin back in 2009, but China's government does not see the benefit of this type of untraceable and uncontrollable currency. China has been banning ICOs and crypto trading, and then it banned crypto mining, forcing many of the miners to have to migrate over to other countries. The banks have also ordered banks and other payment companies to not provide services to crypto-related transactions. And with a clear understanding of the ambitions and lofty goals of China, the conversation then transitions back to the United States. With the Chinese government's stance on private cryptocurrencies becoming hostile while simultaneously intensifying its experiment with its digital form of government-backed yuan, there is a chance that the United States might actually for once start taking the conversations around a digital dollar a bit more seriously than it has been. So far, officials in the United States have remained sanguine about the implications that the digital yuan will have on the American economy and geopolitical standing. The recent success of China might force officials to reconsider their stance. Digital currencies will become a backbone to meaningful cross-border payments. Already, the Bank of International Settlements, which is an international financial organization owned by the world's largest central banks, published some research in September of last year that said the central bank could reduce the time needed to make cross-border payments from days to just a couple of seconds, and cut the associated costs by nearly half. Opposition and animosity to China is one of the few things that remain bipartisan in topic. Both Republicans and Democrats see China as a looming threat to its status in the world, and there is a strong desire to prevent China from toppling the dollar's supremacy. Consensus around this issue could be built if there is collaboration between both sides. As of right now, most foreign purchases of Chinese exports are paid in dollars. China wants to eliminate this process, with retailers outside of China being able to convert currency without having to use banks. With China being the biggest supplier of the world, they would love for everything to be bought and sold as soon as possible using their own financial applications and currencies. This is one of the biggest threats to that exist for the American economy in my opinion. Because of politics, we have major hurdles surrounding the existence of a potential digital dollar. The Fed of Boston has been working to develop an open source code that would enable private parties to begin pilot projects that could demonstrate a digital dollar's utility. Delays in solving this matter are only going to set us back and allow the digital yuan to grow in popularity. China's digital yuan is dangerous and their government incredibly hostile, but those first impressions won't matter a lot if accessing digital yuan to perform transactions is a lot earlier. It will be interesting to watch what the government has in store for a digital dollar, and how it would implement it, but we know it has to happen if the United States has any meaningful hope to remain on top as the world's leading currency. And what is all I have to say for this video. Again, we are going to be talking more about macro and microeconomics in the channel in the mornings. If something big regarding housing or Wall Street pops up, you bet I will make a video on it, but I think we have covered most of the important stuff regarding those topics, and have done well to answer all the significant and important questions that are related to why Wall Street and Washington run the way they do. Now, I want to explore newer economic subjects that will help us understand and prepare for what is to come, as we await the greatest squeeze of all time. Let's try to finish up today as high as possible on GME and AMC. Yesterday's after-hours run was incredible to see, but such a run without strong consolidation will not hold for long. Before I let you go, I kept getting asked why we ran yesterday. I said that the media started releasing a bunch of reports about GameStop entering the NFT market, but this was nothing new. It could be that shorters simply collaborated with the media to have them say that to make it seem this media announcement drove the price up when in reality, shorters had to cover all the failed to deliver stocks. I will need to look at some data, but this is a very plausible scenario, because there is not reason for that type of run on news that were a bit old, though they were not reported by the mainstream media. Thank you so much for making it to the end of the video. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Hope you keep having a great day, and I hope to see you later today on the recap video. Until then, keep on buying the dip and to the moon.